Hey guys, Dave Silliman again, coming at you with Qualified Opportunity Funds. Today, just wanted to kind of throw out a couple quick questions that I've had in the last couple days regarding these Qualified Opportunity Funds, and it specifically is regarding setting up a Qualified Opportunity Fund. And a couple of questions that I've gotten is, can an opportunity fund, can the investment in an opportunity fund, can that either corporation or that partnership, can they use the Qualified Opportunity Fund money to invest into REITs, to invest into bonds, to invest into debt instruments, or anything else of that nature that may or may not revolve around real estate, but it's not the tangible aspect of real estate, like going and buying a house or a building? The answer to that question right now is no. A qualified opportunity fund cannot reinvest the tax-deferred taxpayer dollars into REITs or anything else to that nature. It has to be physical, tangible property. That tangible property has to meet a couple different criteria. It's either got to meet substantial improvement or original usage. But every one of these qualified opportunity funds, though, is going to revolve around physical, tangible property, at least for the interim. My estimates probably over the next 18 to 24 months. I keep saying I think that there's going to be a little bit of a settling period with these funds getting out there, especially in January when it really just kind of starts hitting the media in a major way. But the purpose of this is for community revitalization, and that I think is the important thing. It's natural that investors are kind of coming out of the woodwork, people wanting to set these funds up and are trying to kind of skirt the system already, and that's the danger in something like this. But investing in a qualified opportunity fund is a wonderful, wonderful tax deferment tool. If the fund issues qualified opportunity zone stock, it could be a phenomenal investment vehicle for you from a stock position and equities position in a company's standpoint, where you're receiving dividends or yields on the profit of the entire organization of the company, irregardless of whether or not it's through real estate. Let me give you an example of what I mean by that for stockholder investors. Let's say that a fund invests hypothetically into a hotel, okay? That's the case with the Sakari fund. It's one of numerous that it's going to be investing into. But it invests in a hotel. Substantial improvement, gets the hotel up, going. Now this is a hotel that's operating on a business model, making hopefully a profit. That profit is profit to the fund over and above other investments that the fund has done itself. So between natural rates of appreciation, between business usage of property, creating capital and dividends and returns on the investment, these should be a phenomenal and, in my opinion, probably a first resource for most investors if they're facing a gain to really take a look at. But I wanted to talk and just kind of answer that quick question. Fundamentally, right now, unequivocally, the answer is no. You cannot use qualified opportunity funds for anything other than qualified opportunity property. And you cannot buy REITs, you cannot buy debt instruments, you cannot secure anything to that nature if it's not the physical, tangible property. Now, once you own the property, now you can use the funds to rehab it, substantial improvement. You can use the funds in other aspects to pick up other property. You can use 10% of the fund towards operation of the fund, operation of the business. But it has to be physical, tangible property, both residential and commercial. If you've got questions, post them in the discussions. We're really trying hard to educate as much as we can, get this information out into the public now. There's this 180-day window that we've talked about extensively, and we're going to continue to keep talking about it between now and tax season. But if you've got questions, you can find us on opportunity-funds.com. You can check out the Sakari Lux Fund, which is Sakari, SIKARILUXE.com, Sakari Lux. If you want to find a little bit more about me, my background, I've been doing this now for a little over 15 years. I've been in the finance and the consulting world. I've had an opportunity to build some corporations around government programs in the past. I'm certified with taxes. My family is involved heavily in taxes. So it's something that does kind of run in the blood a little bit. If you're looking at wanting to set up a fund and you've got questions, visit easydoit.com. I'd be glad to help answer any questions that you might have. Until next time, this is Dave Silliman with Qualified Opportunity Funds.